Hi guys, welcome back to the channel. If you're new here, I'm the Imbalance trader, and today we are doing the weekly breakdown video. I know that I said I was gonna make a weekly breakdown video last Sunday, but I didn't do that. Life, stuff happened, and I wasn't able to do that. So I'm gonna go over what has happened this week that I've gone through my analysis and the prediction that we have done before, and how they deliver pretty much very closely to what we were expecting. And then we're going to go to what can we expect in the next coming week. This week we did have FOMC, which made the market move quite a lot. The market did move quite a lot during FOMC week. And we got to talk about that. We got to talk about FOMC. We got to talk about the delivery that has happened during this week, and where is price going, and where are we expecting price to go moving forward this upcoming week. What are the things to look out for? What are the things to be careful with? And then get to it. So without any further ado, let's get into it. So last week, if you guys remember, I was talking about DXY on the daily time frame. That I was looking at the weekly high, the daily weekly high, which is 105,884 level, which is a weekly swing high. I consider that as a buy side liquidity, and I was looking for price to deliver there. I was looking for that 4 weeks ago after we dropped back into this weekly fair value gap, and the expansion was, I wanted to get above 104,500. We did that. Then I wanted it to get into the daily consequential encroachment, which we did here. And then finally, my last kind of like objective for DXY or the dollar to reach is above the 105,884. We did trade last week. We trade back into a consequential encroachment of the previous week, which in my personal analysis last week, I was making that. So if you want to keep up with those kind of like personal analysis and stuff like that, join the Telegram group, subscribe there. It's free so far. And, I do post weekly analysis and personal analysis that I do, or trade ideas that I think it might happen or that I'm taking at the moment. So you can check it. The link is going to be in the description. So it dropped back into that consequential encroachment, which was expected. I was looking at a couple of things because we did have a weekly volume imbalance, a weekly fair value gap down here. So I was looking to see we can, because there was gonna be FOMC during that week. So the expectation was that price may drop into that weekly consequential encroachment or even below into this fair value gap. So those are the options that were open to us, and we just have to look to be careful with that. So it did trade back into the weekly consequential encroachment, then expand higher. The low of the weekly candle did not close back into this daily volume imbalance, and then it expanded higher into a monthly volume imbalance, which expanded to the consequential encroachment of the volume imbalance. We did reach that level before in early this year around February, and aggressively retraced lower, unable to take out this low, which we created an equal low, which was a sell side that got purged in July. Then we had the shift in market structure here in, I think, August. Then we trade back into the fair value gap in September, and the expansion since then. So this is gonna be the closer look. So if you look here on my analysis, I was saying that although it has reached all the way to the weekly consequential encroachment, we can see that the body of the candle of the daily candle didn't close outside of the daily fair value gap. On Monday, it traded down. I'm just gonna go into it. So as you can see, last week I was talking about this fair value gap that we did have a daily fair value gap here. So it may trade back into it before it trade back into this critical encroachment, which it did. Then I was also looking at this new daily fair value gap. It did trade into the fair value gap. It did go all the way to the consequent encroachment, the weekly consequent encroachment. But what is very impressive is, as you can see, none of this 3-day from Monday, Tuesday, Wednesday closed below the consequent encroachment of this daily fair value gap. They are both closed above the consequent encroachment, which, by the end of Wednesday, after having FOMC, we can say for sure that we will see some kind of delivery either into this volume imbalance or low of this volume imbalance or all the way up here, which are levels that price really did reach on between Thursdays and Friday on DXY. So if we were to be bullish on DXY after FOMC Thursday and Friday, we'll be looking for short trades on index future, S&P 500, Nasdaq, US 30, Euro USD, GBP USD, and the forex pairs that correlate with the DXY. So that's kind of like how I usually do my analysis. The dollar is the main pair for me. Everything starts based off the dollar, and then kind of like slowly goes down into everything else. So as you can see here, we did move as we were expecting it. So that's what happened this week. This is a closer look. As you can see here, it traded down into this daily fair value gap, did not close below the consequent encroachment. We had an expansion of higher. This was Wednesday FOMC, and on Thursday it traded back into the high of this candle, which is an immediate rebalance. And then on Friday it traded all the way to the consequent encroachment of this monthly fair value gap. So that was DXY. Now, how does that relate to S&P 500? You remember I made a video about 3 weeks ago talking about this fair value gap right here. I was saying that this was an inversion fair value gap and that price may turn around from this inversion fair value gap, because on DXY we do have monthly fair value gaps that we're trading off of. On ES, we also have a monthly fair value gap that we did trade into the consequent encroachment of this monthly fair value gap. But because I was bearish on DXY, I was expecting some kind of a retracement on ES. And during that following week, we did have an aggressive reaction to it. And last week, we had some kind of like retracement. We had a lot of news coming into the market: CPI, PPI, unemployment changes, and all of those high impact news that was affecting market so much that we did go back to retest the consequent encroachment of that inversion fair value gap. So we trade into the inversion fair value gap, move away from it, trade back into it once again. Did not close there. It wicked all the way there, but the body of the candle stayed in a daily volume imbalance. And then we opened this week, we trade higher into that daily volume imbalance, and then close below this sell side, which is below the consequent encroachment of the week of the monthly fair value gap. What does that mean? It just means that now there's a higher chance of price going lower, reaching all the way into the 4,300 level. Because prior to that, when we had price here, because of this level of resistance, the monthly fair value gap, we weren't sure enough. It's a monthly fair value gap. It could just come down below, retest this consequent encroachment and consolidate throughout it. But once we see this week closing with such strength, with such speed, with such displacement below the consequent encroachment, what it's telling me is that next week ES is much more likely to move lower, and my expectation for next week is for ES to try to reach into this volume imbalance, all the 43.25 and 4,300 level. That's my expectation on a weekly level from ES. We'll see how that happen. It is gonna be the last week of September, prior to NFP week, which is the first week of October. So we'll see how that turns out. We did have this daily fair value gap that it kind of like trade through and consolidate in between before moving lower, taking out the sell side liquidity, so forth. And on a daily time frame on ES, we do have, it's just the same thing. If you look here, we have a weekly fair value gap that is traded to. So if we look here, we do have a retracement, even though the body of this candle did not close outside of the inversion fair value gap, it did retrace into a weekly fair value gap. So here on daily, you can see that, okay, it touched the weekly fair value gap, it retraced quickly lower. We did have a daily fair value gap in between, which it was struggling to close below that daily fair value gap. Throughout, even until last week, Wednesday, we weren't sure if price were gonna move away from that daily fair value gap, which is here. That's the high of it and that's the low of it. So it failed to close below. You keep retesting it week. Then last Friday, it slammed down to close at the low of the fair value gap. It opened this week, trade back into that daily fair volume imbalance. And then on Tuesdays and Monday, trade back to the constant encroachment of Monday's weekly candle. And from there, during FOMC on Wednesday, it slammed down. Here's how it's showing us that, okay, it wants to deliver lower with such aggressivity, with such volatility. Here, look how it respected the daily volume imbalance here. Bam, 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 bang. But during FOMC news, it disregarded those daily volume imbalances. It did not respect that one. It did not respect that one at all, closing lower here, right? And then, so once it opens, we just have this sell side, and then this sell side to be taken, and it was aggressive. It wants to get there. Price wants to deliver to that 4,400 level, which is what it did. It just slammed down, all the way down. So now, we're going to see how price presents itself next week, and how the delivery is going to be. You just don't want to jump in and want to short the market, etc. But also, this is not a financial advice. This is speculation, because anything can happen. We can open next week, price turn around, go all the way up back here. So I'm not telling you to short the market. I'm not telling you to buy the market. All I'm saying here is my speculation of this market. And this is just for entertainment purpose, nothing else. Trading is risky. Protect your capital. Make sure you know what you're doing, and don't use money that you aren't willing to lose when trading. So with that all being said, let's go back to it. So this is kind of like what I'm looking on DXY, and we can see that we have a daily fair value gap here. Next week, we may see a retracement back into this daily fair value gap. Why not? Into the daily fair value gap, that could be something that is possible, or into this candle, the low of this retesting this candle. We'll see how it presents itself. Right now, we don't have any information. Right now, price pretty much just delivered to the level that we wanted. Ideally, you want to step aside and wait for market to present itself to give opportunity for things to happen. We cannot always just chase price. Trading you don't want to chase price all the time. Maybe you missed those moves. I did miss most of this move. I missed the FOMC. I missed the PM delivery I missed part of the PM delivery on Thursday. I got a little bit of something on Friday, but I just chill. I will get another opportunity and be able to trade again. So that is DXY, and yeah, so this is ES. Now let's take a quick look at Nasdaq. Nasdaq is pretty similar to ES, which is just something that I've said before and I'm saying it again just to reiterate. So like I said 3 weeks ago, I talked about this same inversion fair value gap on Nasdaq, which on ES and on Nasdaq we trade into it. Nasdaq were looking much more bearish at the time. We wanted to figure out to see if it is willing to move lower. Right now we can see that ES is a stronger pair right now because it's driving the sell side. You can see that the delivery on ES is aggressive. It's trying to get to the point it's running, and Nasdaq is kind of following. Nasdaq is a little bit kind of like the weaker side at the moment. Now you trade back into that fair value gap, trade lower, you trade into a daily fair value gap, a bullish fair value gap, which we were struggling. We were looking at, okay, how does it react to the consequential approachment of fair value gap? It did not react as we wanted until the end of last Friday, which was this nicely close below the consequential approachment. And then this week it opened, it traded higher into that consequential approachment once again. And as you can see, delivered below August 21, August 21st sell side. So it delivered there. Like I said, I'm looking at a delivery maybe into this weekly volume imbalance by next week, and probably 50% of this fair value gap, which I would say that's gonna be around the 14,454. So 14,700, 14,454. Those are kind of like ideal level that I'm looking at on DXY now. So that's that. On daily, we can see that, we do have a weekly order block here, which is this last up candle. It trade back through this up candle, started to move lower, trade back into that daily fair value gap that I was talking about. Consequential encroachment, failed to trade higher. It was facing some resistance to go below this level, trade back into the consequential encroachment of the inversion fair value gap. It doesn't look that much on the daily time frame, but it is a weekly inversion fair value gap. Trade right to the consequential encroachment twice. First time, trade below, meet this level, resistance, trade up again, Friday, slam down, showing us the willingness to move lower. And as we were opening as we were opening at the beginning of this week that is closing, right? I was looking at the consequential encroachment of this candle, which it trade to 50% of it. Trade 50% there and trade back once again on Tuesday, then once again on Monday trade to the consequential encroachment, which is FOMC. We can see the aggressive delivery. Note how it disregard the daily fair value gap, the daily volume imbalance. From there, it slammed through this level, and then it closed below this daily volume imbalance. Then on Thursday, it opens once again, and then just kind of like get to the point, run to get all of this liquidity, and then close here on Friday. Going into next week on the daily, I'm not seeing that much at the moment. I'll need more information. I'll wait for Monday, Tuesdays to come in, show me what they want to do. Ideally, I want to see the 750, the 700 get there, but we may see some retracement. We may see a retracement up to 50% of this fair value gap, up to 50% of this week, which is going to be the consequential encroachment. So around the 960 before any move lower, or we can see a retracement all the way back into this fair value gap, even above, before we see any movement below the 794, below the 794 and 755. Those are kind of like the levels that I want to see at the end of next week, but we'll have to see some retracement before we even get there. Bonus point, we're going to do a little bit of US 30 analysis as well. I know a lot of people trade USD. I'm starting to like USD a little bit, which is a pair that, if you can see the deliveries that we have had throughout this month, among ES, NAS, and USD, I think USD has a cleaner setup compared to all of them. So if we look like, I was talking about volume imbalance on ES, I was talking about inversion fair value gap on ES, inversion fair value gap on Nasdaq. On US30, it is pretty much different. On US30, we did have that run on buy side liquidity here, and we had aggressive, displacement here, creating a weekly fair value gap. I noted the fair value gap as I was noting the weekly inversion fair value gap on both ES and Nasdaq, and the consequent encroachment. We trade back. One of the things I was noting as level of resistance is this last down candle, which is the weekly bullish order block. So this is a high of the weekly bullish order block, and this is the low of the weekly bullish order block and the mean threshold. We trade back into this fair value gap, consequent encroachment. We did not last there. Although we weak through the weekly fair value gap, the body of the candle is telling the story that price wants to go lower, and it's still below the consequent encroachment of this weekly fair value gap. And in the last 3 weeks, we were struggling, because every time it gets into that, every time it digs into that weekly fair value gap, it rejects lower. It did here, did not close below the mean threshold. Again, try once again, couldn't. Once again, last week, was struggling to go lower. And then FOMC came in, open, trade back to the low of this weekly fair value gap, slammed down into the consequent encroachment of last week, of the week prior to last week, taking the low of those of the last 4 weeks and delivering right into the low of the weekly order block, as you can see right here, right to the point. Now, if we are looking on a daily, this is what it looks like this week. So it opens, those couple of weeks, especially last week, it traded back to the consequent encroachment, and on Friday slammed down close into this daily volume imbalance. I wasn't expecting all that kind of drops in 1 week. I was thinking maybe we can have a push, but I was kind of like pretty much confident that this week, or the week that is just finishing, is going to close below the below the mean threshold of the weekly order block, which, it opens. This is Monday, Tuesday, Wednesday, FOMC trade up, taking out the 2 previous day buy side, aggressively closed lower into below the 50% of this void or weekly void of or daily volume balance, and then trade back into that consequent correction once again on Wednesday, slams down, taking out the sell side liquidity, and on Friday proceed to close below the low of the weekly bullish order block. Now, what am I expecting for US30 going into the next week? Well, we're already trade through the obstacle, so my delivery, the level that I want to see EX goes to, is the sell side here. It's gonna be the 33,308. This is the level that I'm looking at on US30. Before that, we may see a run down into this void, so that's also a level of interest, which is between the 33,964 and 33,903. Those are the ideal level. We may see a retracement this week before it moves lower, but it all comes into a context as we see Monday and Tuesday unfold. That will give us a better idea for the rest of the week. We can see opens on Monday, trade all the way down, and then the rest of the week is spent consolidating. That is fine as well. But the point is to always try to anticipate where price is likely to go on the next week. That's how we take our trade. That's how we base our bias and analysis off of, right? So yeah, this is it for this video. I hope it is insightful. Also a reminder, here I'm doing a weekly breakdown of my biases of the market or my daily bias. However, when I'm taking trades, I trade on 5-minute time frame, which I usually do those analysis. I post them in my Telegram group. I also do have a private Discord, but that's a story for another time. If you want to get access to those, lower time frame analysis and actual trade analysis that I put out after or before the trade or after, subscribe to the Telegram group. It is free. Check it out. You might find something in there that is helpful to you. But until next time, my friend, I wish you safe trading and peace.